Fundamental reasons. Tell me one question, answer to everyone. Everyone kindly answer this now. Fundamental reasons are the reasons for change of forex rates in long term or short term. Fundamental. Fundamental reasons are the reasons for the change in forex rates in long term or short term. It is in everyone long term, correct? Okay, it's in long term. And technical reasons are for short term, always. Technical reasons are for short term. Always remember, in any market, right? In any market, technical analysis is for short term. Fundamental analysis is always for long term. Always, okay? Technical analysis is always for short term. Okay? So let's study the technical reasons now. Government controls can lead to unrealistic value of the currency, resulting in violent exchange rates. Now, what do I mean by this government controls? Okay, violent exchange rates. Freedom or restriction on capital movement can affect exchange rates to a larger extent. Now, understand one very here. Unless you get the examples, you won't understand these concepts. Government control. What do you mean by government control? Where does the government control the forex? Have you seen any government? Because what happens is, in India specifically, we have not seen the government controls over the forex. Government in India doesn't control forex. Okay, no RBI, no government controls the forex. It is completely controlled by the market. Okay, it is completely controlled by the market. But in many countries, government still has a huge control. For example, China. Okay, China, I'll tell you, the reason means in one night, China had reduced their rates, okay, reduced their yuan rates to by 6% through government interference. They had they had done it through government interference, so that is not allowed. In India, this is not allowed. In India, government will never control any change in the forex rate. Okay. So government controls can lead to unrealistic value in the currency, resulting in the violent exchange rates. Okay. Now, important part over here, around 5.5 to 6% roughly. So what happens is people try to invest, take the money out from USA and invest in India. Okay. People generally do the arbitrage over here. This low yield to high yield, that's this concept is called as arbitrage. Arbitrage means what? I'll give you an example. Okay, arbitrage, because then you'll understand it better. CIB is mainly about understanding. Okay, so yeah, can everyone hear me properly? Because somebody has written not audible. Log out and log in. If not audible, okay, log out and log in. Okay, if not audible only. Yeah? Otherwise, no problem. Yeah. Okay. Yeah. Now, what is arbitrage? I'll give you a simple example. Suppose, let's say, I'll give you a simple example from one of the books only. Let's say USA. USA, the rates are, let's say, 3%. Okay. And UK, the rates are, let's say, 6%. Okay. Now, what happens if I am the trader? What will I do? If the rates in USA are 3%, bank rates in USA are 3%, what will I do? I'll take a loan from USA of $1 lakh. $1 lakh, okay? And I'll pay 3% interest at the end. So I'll pay them what 3K dollars as an interest at the year end. At the year end. This is at the end of the year. What will I do with this 1 lakh? I'll convert this to pounds and invest it over here. Here, what will I get? I'll get 6%. So I'll earn 6K over here at the end of the year. So now I am in plus 6K and here I am going minus 6K. So what will I do? I'll at the end of the year, I'll bring this capital back. Okay. And pay this USA bank, the loan which I had taken along with that interest. So net, what have I done? I've earned 3K, right? 3K is my net profit over here. by just transferring the funds from USA to UK. This is known as arbitrage. All the FIIs, foreign institutional investors, always work on this arbitrage concept. Always. Okay. You might be seeing the stock markets falling heavily when USA increases their rates. This in the recent past 1 or 2 months, you might have seen this. Why has it happened? Because if the rate of interest in USA increases, the investors feel that they'll get better returns over there. So they shift their money from one country to another. It's as simple as shifting from banks. Okay. So that is known as arbitrage. So capital always tends to move from lower yielding to higher yielding currencies, resulting in movement of the exchange rates. Speculative forces can have major effect on the exchange rate. Speculative means middlemen, okay, generally brokers and media agencies, okay. In an expectation that the currency will be devalued, the speculator will short sell the currency for buying it back cheaper at the later rate. So devalued means what? Devalued means, okay, when does the rupee get devalued? Suppose if let's say $1 equals to 80 rupees. Okay. And now what happens? $1 equals to, it becomes 100 rupees. So now what has devalued? Dollar has devalued or rupee has devalued? In this case, whether it will affect import and export. Yeah, it will definitely affect. I'll come to that also. If $1 equals to 80 rupees, now what happens? $1 becomes 100 rupees. So what has got devalued? Dollar has got devalued or rupee has got devalued? Rupee has got devalued. Why? Because for buying $1, earlier I had to pay 80 rupees. Now for buying $1, I have to pay 100 rupees. So my rupee cost has gone down. And always remember, once the devaluation in currency happens, the main part who is affected is import and export. Exporters will always benefit from devaluation of the currencies. Okay. Exporters will always benefit from the devaluation of the currencies, and importers will always benefit from appreciation of the currencies. Always remember this. So this is the reason, if the rupee gets devalued, always see IT company shares are always increasing if the rupee gets devalued. Okay. You check the market anytime. Here, I'll give you one simple fundamental of stock market. If the rupee gets devalued, IT company shares always increase. IT. Okay. And if the rupee appreciates from 100 to it becomes 80, then the banking stocks appreciate. Banks. Okay. Always it's like this. If Because why? This IT company, they are mainly in exports. So once this gets devalued, these companies will get higher rupees for $1. So that's why these things happen. Okay, move on. So speculator will short the currency for buying it back at a cheaper rate. Now what is short selling? So the short selling means selling now and buying later. There are two positions always in any market. One is long position and second is short position. Okay. Long means what? Buy now, buy now, sell later, sell later. And short position means sell now and buy later. Okay. Now short position is very allowed to genuine customers only. Okay. Most of the forex deals are done on the spot basis. Spot means what? Now we'll come to some basics of JAIIB also, meaning thereby that the delivery of the funds takes place on the second working day. Now understand this. What is cash ready? Cash ready means settlement takes place on the same day. Now what do you mean by settlement? Settlement means here dollars. Say this. Whenever you do any exchange, there are two things. One is money, cash. Cash means local rupees, and second is commodity. Always in any exchange, there are two things only. One is cash, either it can be rupees in India, and commodity can be anything. It can be gold, dollar, or it can be stocks, share market, stocks. Okay, it can be anything. But two things are necessary for exchange. Two things are necessary for exchange. One is cash, rupees, and second is a commodity. Now what happens is, if the settlement takes place on the same day, means what? If I give rupees to this seller, I get the gold on the same day, or I get the dollar on the same day, then it is called as cash ready. Now see here, cash and ready are two separate words. They are not the same words. Okay, cash and ready are separate words. Means in exam they can say cash also or ready also. So it becomes the same day transaction. Tom means next working day. Means I give rupees now, but gold I'll be getting tomorrow. Tomorrow means what? Next working day. If tomorrow is holiday, then I won't get it tomorrow. Okay. In any forex market, always remember Saturday and Sunday. Always remember this. Saturday and Sunday are considered as holidays. Strictly, they are considered as holidays. Okay. So if somebody is doing some transaction on Friday, then the term of that transaction comes on Monday. It doesn't come on Saturday. Okay. Spot is what? Next to next working day. Means they call it sometimes second working day. Second. Okay. Working day. Second working day. Next to next or second. Anything it can be called. Okay. Now, and forward means any day after spot. Now, what is future? Now, before going to future, let me clarify a few points about spot and forward. Okay. Now, answer my question. If today is Friday, and I have done a transaction today, then when will be the ready position of that? Today is Friday, I have done a transaction. When will be the ready position of that? Ready. Today, Friday only. Correct? Friday, not Tuesday. If Friday, then Friday. When will be the Tom position of that? Tom position of that? Monday. Correct? Spot Tuesday. Okay. Spot is Tuesday. Everyone okay? Spot Tuesday. Okay. And forward? Forward will be? When will be forward position? Correct. That's the right answer. That's what I was expecting. It's not Wednesday. It's any day on Wednesday or after Wednesday. Correct. It's not Wednesday. So forward means any day after spot. Now, once you understand this forward, then you always hear these two words of future and forward. Future market. If you see CNBC now, you will always see this future, future, future always everywhere. So what is this future? What is the difference between this forward and future? Is there any difference or no? Okay. See here, understand this important point. Forward and future means one and the same. Okay, I'll explain you one important part over here. Forward and future means one and the same. Only there is a slight difference. Slight difference is future is organized forward. Now, what do you mean by organized forward? Organized means what? See here, understand this concept. If I am doing a dollar transaction with my customer, I am the bank, okay, and there is one exporter which has come to me, or let's say exporter only, okay, some exporter has come to me. Then the transaction is happening between whom? Me and the exporter. Two parties are involved, right? So this transaction is called as OTC product, OTC, over the counter. In OTC market, bank and the exporter, only two parties are involved. Okay. Now I'll ask you one question on this. Suppose if some customer comes for loans, OTC means over the counter. OTC is over the counter. Okay, I'll write it over here. Over the counter. Okay, over the counter. OTC means over the counter. Now I'll ask you one question. If some customer comes to you for loan, huh? In that loan, do you have the privilege? Does your bank have the privilege of adding plus 0.5% or reducing 0.5% to any customer? CC customer, let's say CC customer. Not all the customers in your branch will be at the same rate of interest. Somebody will be having 0.5% extra, somebody will be having 0.5% less. Why? Depending on the customer's financial background means his history, customer's history of payment, and the credit score of that customer. Okay, so that's why in OTC products we always have the leverage of we can change the rate of interest for certain customers in OTCs. Okay, now what is future then? Future is organized forward. Now what do you mean by organized forward? I'll give you a simple example. Many of you might be having these demat accounts. We can convert INR to dollar for change. What we can convert the loan to INR to dollar for change of ROI. Yeah, you can. You means not you actually. You need to have that this means the transaction which you need to do. You need to prove it to the bank that the loan which is being converted, the customer is having that much foreign forex interactions. Any customer can't convert it, but for bigger customer it's allowed. Huh? Gopal, it's allowed. Because I'll give you an example. See, the question asked to over here is, can I convert the loan of rupees to dollar loan? That is allowed. Okay, even RBI allows that. Only the point is, it can't be done for everyone. Okay, what happens is many of the NRIs do this. I've seen this. Many of the NRIs do this in my bank also. What did I used to do? They used to take the home loan from me first, immediately, because they wanted some to buy some property. They used to take the home loan, and those NRIs were in what USA. In USA, the rate of interest on loans on many card loans also it's hardly 0.5 or 0% rate of interest. They give it on 0% also. Many of the credit card loans, and the loans are over there in dollars are equivalent to the home loans over here, 60 lakhs and 70 lakhs. Okay. So what did this guys used to do? They used to convert that loan from my loan and just deposit the dollars from there. So the amount gets repaid. So 9% of that customer is saved. Similarly, Anil Ambani had done the same trick. What did he do? In fact, not only Anil Ambani, many of the companies, these corporates, do the same thing. They take the loan in urgency from India, from many of our banks. And then what do? They go to the foreign companies, foreign countries. There they take the loan at the lowest rate, 0.5 and 1%. And then they repay our loans. Okay, this thing happens. Okay. Now, coming back to the future part. See this. Whenever you buy or sell any stock in stock market, okay, do you know who's the seller? Suppose if I buy a Reliance share now, okay, in the stock market, do I know who is the seller? No. Why? Because there is NSE in between, NSE or BSE, both anyone, okay, NSE or BSE. So when there is a third party involved between the buyer and the seller, then that is called as future. So what does it mean? In future, there is always a third party which controls the transaction. Now, what is the use of this NSE and BSE? These act as a guarantee. Means if I make the payment, okay, for buying the shares, they act as a guarantor that I will definitely receive the shares. Even if the seller doesn't sell the shares, this NSE is a pool of the shares. So those will be received by me. So that's why future transactions are always supported by RBI rather than forward. RBI always tells each and every bank to follow future transactions. Always take third party in between. Now, which are the third parties? Okay. In stock market, there is NSE and BSE. In forex, in this bond market, there is something called as CCIL, Clearing Corporation of India. CCIL acts in bond market mainly and even forex market. CCIL acts mainly in two markets, forex and bonds. Okay, these two markets. Even NSE acts in the bond market nowadays. NSE has also started dealing in bonds. Okay, so got this point now, everyone? The date of delivery of funds on the date on which the exchange of currencies actually takes place is referred to as the value date. Value date means for Tom it is the next day. Spot is the next to next working day. Means when the funds are actually exchanged. Okay. Forward rates are derived from the spot rates and are the function of spot rates and forward premium or discount of the currency being quoted. So forward rate means basically, see here, how do we come to this forward transaction? In JIB, you might have studied, many of you. Okay, explain forward and future. Okay, just I'll give you forward and future example, then you'll understand it better. Okay, forward means, future means organized forward. Whenever you give a loan or loan to any customer, that is basically OTC product, forward type transaction, because there are only two customers involved, two parties involved. In forward there are always two parties involved. Hold on, let me remove all these things. Okay, in forward, just one line explanation now I'll give you. Forward, two parties involved, two parties. Okay, in future, three parties involved, that's it, three parties. Okay, two parties means buyer seller, okay, and three parties means buyer, seller, and mediator or exchange, you can call it exchange, that's the better word, exchange. Now that exchange can be anything, anyone. Okay, NSC, BSC, CCIL, or anyone. Okay, so that's the basic difference. Okay, understood now? Yeah. Now forward rate is always spot plus or minus premium, premium and discount. Means if we are in the, if the currency is in premium, then we add it to the spot rate. If the currency is in discount, we'll subtract it from the spot rate. Okay. Understand this, because tomorrow I think so we'll be solving numericals on this. Okay. Tomorrow and day after tomorrow we'll be solving numericals on this. So forward rate means spot plus premium or spot minus discount. Now I'll ask you one question. Okay. The question over here is, suppose if the spot rate over here is, understand this problem, whatever I'm telling you. Spot is now 80.23 oblique 33 series. Okay. Now what do you mean by 80.23 and 80.33? 80.23 is the buy rate. Buy rate means the rate at which the customer will, the bank will buy the dollars or whatever the currency is. Okay. Okay. What is the question? Subranjan Datta. Future transactions are always safe. Right? Yeah, definitely. Future transactions will always be safer than forward transactions, because there is one guarantor in between in future transactions. In forward, there is no guarantor, right? Why do the loans fail in the banks? Why do the loans become NPA? Why are the loans becoming NPA in banks? Because it is a OTC product. Loans are always given between the bank and the customer. There is no third party involved, right? If I'll tell you one important part. Now, as the point has been raised by what Shubhanjan, as the point has been raised, how can I, as a seer, you all guys are in CIB, right? You are not in JIB. So I'll ask you one question. How can I reduce the risk in my loans? See, here, loan is an OTC product. I'm giving this loan, and that loan is, if it becomes NPA, then I'm definitely at a loss. How can I reduce this risk of my loan? Number one, what will I do? I'll first take the insurance of that loan. Once I do the insurance, that is called as CDS, credit default swap. Okay, security is a part, of course, security is there, collateral is there, security is there. That's a main part. Other than that, what will I do? I can get the loan insured also. That's called as CDS, credit default swap. Okay, credit default swap means if the loan becomes NPA, the unsecured part of that loan, if it becomes NPA, then what happens in that case? The insurance company pays me for the loss. That is basically CDS. Okay. So that way I can even reduce my OTC product risk in any field, not only loan. I can do it in Forex also. Okay. Now coming back to a point over here. Now this spot was 80.23 and 33. Now you tell me, if I only consider the spot rate 80.23 and 33, can you tell me that this currency is in premium or discount? See here, I'll just give you the spot rate now, 80.23 and 80.33. Is this currency is in premium or discount in spot? Anyone? Premium? Why not implemented CDS in banks? Yeah, they are implemented now. I'll tell you. I'll come to this point. Gokiran, yeah, I'll talk there. They are implemented. Okay. Now let me ask you the question. Majority of you will give the wrong answer. I know it. The question is 80.23 oblique 33. Is this current? This is a spot rate. Is this currency is in premium or discount? Many of you have answered it is in premium. Understand? The answer is not correct. Why it's not correct? Because premium or discount is never decided. Understand everyone. Premium or discount is never decided on spot rates. Premium or discount is always decided on the forward rates. Okay? Because 80.2333, this is a spot rate. Spot means now only. Do it, take the transaction, take the dollars, give the money. This is a spot. Okay, so premium or discount will never be decided based on spot. It will always be decided on the based on forward rates, forward premiums. Okay. Now look at the second part. If 1 month rates are 10.20 and 2 months rate are 30.20. Okay, 1 month rates are 10.20, 2 months rates are 30.20. In that case, what happens? Now I can tell that the currency is in premium or discount. Now what do I say? In 1 month, the currency is in premium. Why? Because the right side is bigger. Always remember, when the right side is bigger in the forward rates, forward premiums, okay? When the right side is bigger on the forward premiums, the currency is in premium. And when the left side is bigger in the forward premiums, the currency is in discount. Okay? Clear this point, everyone? When the right side is bigger, then the currency is in premium. But that should only be in forward margins. It should not be in spot. Spot, it doesn't matter whether this is 33 or 33 there. It doesn't matter at all. Okay? So the left side in spot is called as buy and right side is called as sell. Actual word to this is bid and offer. If you check it in the forex actual forex market, it's never called buy or sell. It's always called as bid offer. Bid means what am I bidding for getting that dollar? Offer means whatever I'm offering to the customer, that you can buy it from me at this rate. Okay, so coming back, 1 month if I say this currency is in premium, 2 month if I say the currency is in discount. Why? Because the right side is lower. Now, if I want the rates of this, how will I get the rates? For whenever the currency is in premium, I'll have to add the rates. I add the margins. Okay. So buy side will be added to the buy, sell side will be added to the sell. So 80.23 will become 80.33. Say this. And 80.33 will become 80.53. 33 plus 20, 50. Okay. So this is the way we add it over here. But for the next part, 2 months, it is in discount. So we'll subtract it. 80.23 minus 30. 80.23 minus 30. And similarly, 80.33 minus 20. So understand, whether it is buy or sell, whatever you are doing, if the currency is in premium, you will add it. If the currency is in discount, you will subtract it. Simple. Very simple rule. Okay. Uh, who is sell? What? Why is first premium? What is the question? Who is you? Who is sell? Means you means I didn't get this point here. Okay. Many of you might have be confused by now by this, that who is buying and who is selling, isn't it? That's what the question is. I think so, Husania, right? Who is buying and who is selling? This is related to the banks. If bank is buying, see here, if this 80.23 rate is given, that is for the bank to buy. 80.33, that is for the bank to sell. Always, huh? This is for always for the bank, not for the customers. Got it? Clear? Chalo. Next one. Forward rates are a function of spot and forward or forward premium or discount. If the value of the currency is more than the being quoted at the spot, then it is said to be at the premium. While if the currency is cheaper at the later date, then it is said to be at the discount. Now I'll come to one important point over here, which you all will get confused. If the value of the currency is more than being quoted in the spot, then it's premium. Now logic is simple. Means if now, right now, my dollar rate is, let's say, rupee to dollar, dollar to rupee. $1 equals to 80, and in forward market it is being quoted at 100. $1 equals to 100 rupees. Okay. Now what will I say? In forward market, my rupee has become cheaper. Okay, and my dollar has become costlier. So I'll call this, the word over here is dearer, dearer. Dearer means costlier. Okay, and the other word is cheaper over here. Rupee has become cheaper. Okay, now this is for the direct trade system. Direct. Okay, in India we follow the direct trade system. Means $1 equals to 80 rupees. Means dollar is kept constant and the other currency is fluctuating. Okay, generally the home currency, so that is fluctuating. But if I come to the GBP rate, now you'll get confused over here. If the spot GBP against USD is being quoted at 1.6 and 1 month forward it is being quoted at 1.6050, then GBP is dearer value 1 month forward at a premium of 50 pips, means divided by 1000, is being charged for the same. Now what do you mean by this? Say this. When I said dollar, see here, GBP was 1.6, then it become 1.6050, $2. Then we said GBP has become costlier. Dearer means costlier. Okay. But in case of rupees, it's the reverse thing. If let's say rupee over here, rupee against dollar was 1.6 and then it went to 1.6050, then we'll say rupee has become cheaper. But here GBP has become dearer or costlier. Why? Because the mentioning of the rates over here. GBP to USD is always, remember, GBP to USD is always indirect rate. Indirect. Okay. And dollar to rupee is always direct rate. Here it's like this. Dollar to rupee. We always mention the rate like this. Dollar above, rupee lower. Whereas in GBP to dollar, it is GBP above and this USD lower or dollar lower. That's why it's called as indirect over here. Always remember, in direct rate, dollar will be in the numerator. And in indirect rate, dollar will be in the denominator. Always remember this basic rule. Okay. Yeah. Buy low, sell high. Yeah. Buy low, sell high will come in the problems. I'll show you those problems. Okay. Buy low, sell high never apply in the spot transactions, huh? Because what happens, I'll tell you during that problem also. Many of us get confused in buy low, sell high. I'll tell you when the problems come. Okay. Now 1.60, this GBP was quoted and then it became 1.6050. Now look at this. Here you will get a better picture. The spot GBP was 1.60 against USD and a 3 month forward was 1.5. Now this is a separate example. 1.6 in the spot and 3 month forward it was 1.5. Now what has happened? GBP is at discount now. GBP has gone down. Okay, because it has moved from 1.6 to 1.5. Why? Now look at this. GBP to USD. Earlier it was 1.6 to 1. Denominator is remaining as 1. Okay. So GBP 1.6 to 1. Then in forward market, what it become? 1.5 to 1. So in forward it has reduced. So that's why GBP has gone to discount. Okay. So understand this point. Whereas in USD to INR, look at this part. One, it was 1 to 80. Then it became 1 to 60. So what has happened now? In this case, INR has from 80 it has increased to 60, means reduced to 60, means INR has become costlier, dollar has become cheaper over here. Whereas in this case, dollar has become costlier over here. Understand the concept very clearly. Here dollar has become costlier. Here dollar has become cheaper. Okay. Even though the rates 1.6 to 1.5 and 80 to 60 both have reduced. Here it has reduced from 80 to 60. Here it has reduced from 1.6 to 1.5. But then also the dollar rates have become, here it has become costlier. Here it has become cheaper. Why? Because of the numerator and the denominator difference. Indirect rate, always remember dollar will be in the indirect. This is indirect. Okay. Dollar will be in the denominator. In direct rates, dollar will always be in the numerator. Okay. Yeah. So moving on now. Indian rupee spot being quoted at 48.7069. The 6-month premium being 68.58 paise. It means USD is being quoted dearer in the forward, is being quoted at 48.02. Now forget this. Once you have understood the concept which I told you above, you need not even look at this, because it's again a repetition over here. Okay. The forward premium and a discount are generally based on the interest rate differentials between the two currencies involved. Now, interest rate differentials means what? Okay, interest rate differentials. Interest rate differentials means the bank rate interest difference between the two countries. Okay, generally dollar to INR. What has happened is in between when USA started increasing the rates because of that UK issue, Russia issue. What has happened due to this Russia issue? Or the inflation has increased in many of the countries because of the oil supply being reduced. So what this USA has done, USA banks or the central bank over there, Fed they call it, they have started increasing the rates now. Because once they start increasing the rates, the amount of currency in dollars, it moves from all the foreign countries to USA. Always, as we said earlier, funds always try to move from lower yielding rates to higher yielding rates. So if the rates of any country are increased by the central bank, funds always try to move in that country, move towards that country. Generally, this happens with dollar and this pounds. Okay. The demand and supply factors depend on the following factors: movement of capital in normal times as well as out of fright or fear. So this fright or fear always happens. This is the peculiarity of all the markets. Fright and fear is the main peculiarity of any forex market. Even the slightest move by any central bank will create panic in the whole market. For example, do you know which country has recently jumped into this forex market? Recently means only 3-4 days back. Unexpected country has jumped into it. Anyone knows? Anyone has read it in the Economic Times or some newspaper or online also? UK is there. UK is from earliest part. Japan. Who's this? Very good. Japan. Japan is a country which has entered into this market now. Earlier, Japan was a defensive sector, defensive country. It never had any major impact on the world economies. But now, Japan has gone for an offensive policy. Now, what we have to do? We'll have to track dollar, pound, and even yen now. Okay, which are the major 4 5 country currencies which are traded in the whole world actually? Only 4 to 5 currencies are there. One is US dollars, second is pounds, third is yen, fourth is AUD, Australian dollars. Okay, and fourth AUD, these four, and fifth one is yen. I told you, yen is there. Yeah. So these are 4 to 5 currencies which are being traded: GBP, dollar, yen, yeah, Australian dollars, and euro also. I forgot that euro. But now I'll tell you what is happening in India. Everyone should be aware what is happening in India. Now, all the three countries, means basically Russia and India, they are planning now to implement the rupee as a payment mode in various countries. Even many of the countries have started dealing in rupees now. Once this starts, India will grow leaps and bounds. Everyone understand this because this decade, why this decade? In fact, this century is for India up to at least up to 2050. It is for India only. Because once we start dealing in rupees everywhere, then we won't be requiring dollars at all. Okay. Shall I ask you one question? What is RBI doing? Latest news. What is RBI doing regarding gold? Is it buying more gold or is it selling more gold? What is RBI doing? Anyone has read about it? Recent, today or yesterday only the news might have come. What is RBI doing right now? Have you seen it? Buying. Very good. It is buying heavily the gold. Heavily RBI is buying gold. Why? Why is RBI buying the gold heavily? This is related to your BFM topic. Remember this, because BFM relates to each and everything in this world. Okay. So now, why is RBI buying so much gold? Because what has happened is Russia has planned to uh, peg their currencies against, not against dollars, but they are planning to peg it for gold. They are planning to peg it against the gold now. So if the currencies are pegged against gold instead of dollars, then we'll be needing gold heavily. So that's why you need, everyone amongst you, I would suggest, should at least see the financial news on a daily basis. Because as a CIB student, we need to be aware of what is happening in this world. Okay. Okay. So demand and supply depends on the following factors. So movement of capital in normal times as well as in the fear, status of export and import, trade balances, and also balance of payment. Okay. Balance of payment I had explained you earlier, I think so, in the Friday lecture. Okay. There are two things. One is balance of payment and balance of trade. Okay. Balance of trade refers to import and export, and balance of payment refers to net of import and export as well as other things. Okay. Financial and fiscal status of the countries, freedom to invest and move in and move out, infra and labor positions, political stability, activity. This we have already studied about the fundamental analysis, right? Yeah, this part. Okay. Now, one question I'll ask you. You might have just read whatever I said. Move in and move out means what? What is this move in and what is this move out? This parts here, remaining things you are, it's easy to understand. Fiscal status, what is the status of that country financially? Pakistan, what is the fiscal status of Pakistan? Gone. What is the fiscal status of Sri Lanka? Gone. Right? So fiscal means what is their foreign currency reserves they are having. Okay. Freedom to invest means how easy it is for an FII to invest in that market. Move in and move out. Now, this problem, I'll tell you one thing. The negative part about Indian market is this: move in and move out. The negative part about this is move in and move out. See here, everyone understand this, huh? Whatever I am telling you now. Capital gains. Capital gains. You might have read this in capital gains in various earlier things also, right? Capital gains means what? If I sell some product or sell some fixed asset of mine, and I gain something from that for 3 years, more than 3 years, if I sell it, right? Then whatever I incur, I'll be taken as it will be taken as a long-term capital gain, right? So this problem, all the FIIs are pressurizing RBI as well as the government to remove this capital gains part. Because of this, what happens? Many of the FIIs come and invest for around 10 years in India. And once they try to move out, Indian government taxes them on that investment. Now they are saying no, we won't. So this problem will be addressed in one or two budgets. Not this budget actually, one or two budgets I'm telling you. And once this happens, remember the funds in India will move like anything. Okay. Uh, this actually there is a concept called as bond market, means MC. This is called as this World Bond Index. Okay. World Bond Index. Now, India is planning to enter into World Bond Index by 2023, end of 2023. If India enters into that World Bond Index, you all guys will see your banks flooded with foreign currency. The reserves in India for foreign currency will go heavily up if we enter into the World Bond Index. Okay. That is given by JP Morgan, JP Morgan World Bond Index. You check it on Google. India is planning to enter it over there, and for entering into it, the major hurdle is this move in and move out. Once this move in and move out is settled, this capital gain structure is settled by the government. funds in India will be huge, and you all bankers will see huge flush of the foreign funds in your banks. Okay. In a perfect market with no restriction on finance and trade, the interest factor is a basic factor on arriving at the forward rate. Now, interest factor means we have already discussed this bit, the interest rate change differences between the countries. Okay. Government control is a basic factor. Government control means how much the government is controlling the forex. Import and export is a basic factor. So import and export of that country also. Now, these three factors, everyone amongst you will nod your heads that yes, we understood. Interest factor explained. Government control explained. Import and export explained. But one thing which you all might not have understood is what is this perfect market? Everything else said and done. What is this perfect market? Perfect market means this is where, see here, always you must focus on the basics and you must ask the questions whatever you don't understand. Okay. What is the perfect market? Per, should I call the Chinese market as a perfect market? Or should I call Indian market as a perfect market? Okay. Understand this point. Perfect market means their government's interference in the forex market is zero. Zero. Zero means what? Government doesn't at all interfere forcefully. If the dollar rate goes up in India or if the dollar rate comes down in India, does government do anything forcefully? Of course, here RBI will do its action. RBI will definitely buy and sell the dollars through that repo and reverse repo. Okay, it will do it. So it has to do it, but that will be a secondary market operations. That is not a forceful conversion. In China, things are totally different. Their government controls it. Government decides today the rate of my yuan is this much. Tomorrow the rate of my yuan is this much. In India, it never happens. Government or RBI never decides on this. Okay, got this point? So understand the concept of perfect market. Perfect market means there is no involvement of any regulatory agency in that market, and the rate of that currency or commodity is directly decided by the market factors. Interest rate, government control means lesser government control, and import and export. Okay. Now these two parts, everyone pay attention, because you all will explanation, yeah, you all will get confused now in these two sentences whichever I am telling you. Okay, number one and number two, everyone read it also. If the rate of interest, say in US, for 3 months, 3 months, prime bank bills means bank rate, basically you can call this as bank rate. Okay, so we'll call this as bank rate in US. Okay, is 2% per annum, while the similar paper in London, means similar rate in London, can be purchased at a rate of 4% per annum. Now the bank rate in US is 2% and bank rate in London is 4%. There will be flow of funds from USA to London to take advantage of the higher yield shown by the UK bills. Now this you'll say, sir, we already know, because we have just now discussed some time back that funds always flow from lower yielding currency to higher yielding country. Okay, lower yielding country to higher yielding country. So you'll say this we already know, isn't it? Because the rate in USA is 2% and the rate in UK is 4%. So you'll say, sir, what is the new thing? You have already told this in the lecture. But the problem comes in the second sentence. Now look at the second sentence. If the rate of interest in, say, in USA for 3 months is 2%, while the similar rate in London can be purchased at a 4%. Now look at this, both the sentences are same. There will be a demand for USD in forward market. This is something confusing. Everyone amongst you will get confused over here at this part, because this you have understood that USA 2%, UK 4%, people will definitely go to 4%. So from USA the funds will be transferred to UK. So that's done. But what about this? Why is the USD in demand? Because USD is at lower rate 2% and UK is at the 4%. So why USD is in demand in forward market? The reason, because the reason is different. Understand the reason. Now This comes as a CIB question. This is the real C. This is the JIB question. This is what J. I'll write it over here J. And this is C question. Why is this C question? Understand this. See this. A US investor will have to buy GBP by surrendering the USD in the spot market. Okay. Spot means what? Right now I want to invest. So that's why what has happened? This dollar is in, pound is in demand in the spot market. See this. This is spot. Spot market pound is in demand. Okay. Because right now I have to invest over there. But so GBP so obtained by him will be invested in UK bills. This will lead to the demand for GBP in the spot market. Done. This part is over. Okay. At now this is the CIV question. At maturity of the pound bills, the pound received would be reconverted to US dollars. Means if my FD over here in UK, see here, I've invested in this UK bills. If my FD in UK is for 1 year, okay, after 1 year, where am I the investor from? I am from US. So I'll have to go back to US. So if I have to go back to US again after 1 year, I'll have to repurchase the dollars because in USD pound is not used. So I'll have to repurchase the dollars. So if I have to repurchase the dollars, definitely the USD will be in demand in the forward market, isn't it? Yes, that is the point. So these points we always need to understand in CIB. Everyone got this point? This second line is very important. First line is simple one, isn't it? Okay. See here, I'll explain again because some of you are requesting. Say this. Suppose if I am having an FD in UK, one FD for 1 year. So what will I do? I'll convert dollar to pounds, okay? Pounds and invest it over here. So 1 year is gone. After 1 year, this bank in UK will give me my funds back. See this, take your FD back, Bhau. Isn't it? Take your FD back. So I'll take this FD back and what will I do with these pounds? Because I am staying in USA. So I'll have to take these pounds back to USA. But USA, does it accept pound? No, it will say I want dollars. So what will happen? If I want to take these pounds back to USA, I'll have to reconvert them to dollars after 1 year. So that's why in forward market, this USD will be in demand. Got it, everyone? Clear this concept? This concept is the most crux of Forex. Okay? Forward and spot. Always the whole market in this Forex deals in only two parts. Spot, forward, spot, forward, spot, forward. That's it. Okay? Chalo, we'll stop over here. Those who are watching this on YouTube, okay, there are some sessions available on YouTube also, free sessions on YouTube. Those who are watching on YouTube, kindly note that here you can join the classes using this Adda 24/7 website, or also you can join it via app. Okay, so to join it, click on JIB and CIB. You'll see this JIB CIB Mahapack and CIB 23. Click on CIB 23. You'll Once you are in CIB 23, you'll see this English and bilingual batch. If you want English, you can join English. If you want bilingual Hindi, you can join Hindi also. Okay, but I do take English only. I am for English batches only. Okay, so click on this. Once you click on this CIB English batch, you'll see all the details over here. All the 4 papers, ABM, BFM, ABFM, and BRBL. Okay, various teachers are taking it, so you can definitely join it over here. Study plans are given. Also, importantly, you will get mock test, ebooks, then detailed subject-wise expertise. Recorded videos are available because what happens many a time due to our banking pressure, we sometimes we can't attend it. So there you can definitely have it. Also, look at the fees part. This fees part, if you join it now, those who are watching on YouTube, okay, 23,999. Click on view offers. Put the code Y432. Everyone kindly note this code Y432. Those who are newcomers, okay. Click on apply. See this, you'll be getting 80% off, and see this 4799. Now the fees from 23,999 reduces to 4799. So you can definitely go for it. Everyone who's watching on YouTube, kindly note this, okay? Chalo, I'll stop it over here. Bye guys, tomorrow we'll meet again, okay? Hope so you have understood this last part which I've explained, and concepts of Forex are clear up till now. Whatever I explained, only follow whatever I'm explaining right now. Don't go on reading too much. Read less but understand more. Okay. चलो बाय।